Hi everyone, today let's take a look at probabilities for the S&P 500 once we get our rate cuts, as well as some seasonality and the economic calendars. Then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at these scenarios, if we do get that soft landing, you can see there is a potential that we get a really strong gain up to almost 20%. The average here is about a 5% gain from that first cut. You can see a slight dip after the cut and then a rally. Soft landing scenario is basically straight up. And then if you do get that recession, you can see down about 5% on that move. On average, obviously, you could see moves that are bigger than these, but that is the scenario, at least going back to 1965 for the S&Ps. And personally, I think this is what's being priced into the markets. We have seen massive gains over the last couple of months. People understand that if we actually get a soft landing, markets are probably going to go higher over the next 12 to 24 months. And they do list out the scenario from 2019 where we did see that first cut. And then we saw a massive gain of that 30% and 9% return on investment grade bonds, which was obviously very strong. And then they list out the numbers here, on average 15% gain in that soft landing scenario. And there's also the dynamic of people sitting in too much cash as markets continue to stay strong. And then they start moving that cash into equities to try to participate in more of the returns. They also start to lose money in terms of opportunity risk. As yields go lower, they're making less money on that money that is sitting on the sidelines. So they start to put it back into equities. That is kind of what we saw during the COVID run. There was basically no alternative to equities. Yields were so low that basically everyone was all in on equities, trying to make a little bit of money. And then once yields started going higher, then we saw that exfil. Then we saw people moving out of those riskier assets and into safer ones. And finally, here you can see they mentioned that $6 trillion sitting in money market funds. And as those money market funds start to move lower in terms of yield, then we could see people piling into equities once again. Moving over to some seasonality from the Almanac Trader, they mentioned that some of the stocks that underperformed going into December 15th are likely to outperform going into February 15th. People are selling out of those stocks at their lows to realize those tax advantages. And then they have to sit about 30 days, and then people start to buy those stocks back. And they say this is one of the free lunch strategies that is available in markets, basically looking for those underperformers into the year end and looking to see if they start to generate a bullish structure going into the beginning to mid-February. They also mentioned that this strategy has been profitable 18 of the last 24 years, with an average basket gain of 10.5% during that period, which is pretty good. That's a really good return in a pretty short amount of time in terms of what stocks. And then they show all of the data here in terms of bargain stocks versus the NYSE composite, but just something to look out for. Stocks that underperformed into year end might outperform in the beginning of next year. Moving over to calendars, there was nothing on the calendar for today, but for tomorrow we have CPI for the Eurozone, fairly interesting, as well as building permits in the US at 8:30, and that's pretty much it for tomorrow. Moving over to Max Payne, call wall sitting at 476 for this week, fairly high at 54,000. Max Payne sitting down at 468. That's quite a bit higher than we had been seeing for Max Payne. Top of the puts right at 474. Stock price 471 right now. Put walls 465 and 457. Total options actually pretty high here for an off week at almost 1.5 million. Put call ratio still fairly high at almost 2.7. So interesting to see so many options in the market after the witching week. And these call walls are a little bit stronger than they had been here recently relative to the amount of puts, which could signal a little bit of weakness. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily. You can see we ran up, continuing that run into the after hours, from the after hours on Friday into the open this morning, and then almost to that last hour of the day. Then you can see we started to fall a little bit at the end of session. So we did not make a new high. We tried to rally, couldn't quite get above this previous level. You can also see that highly traded zone sitting at 472.50 right now on the hourly chart. That is not a great indicator. That means there was a lot of trading happening at that level. And and you would guess that that was selling. As you can see, we kind of fell out of that session there, out of that level there, so not great. Otherwise, on the day, about 0.5% bullish momentum, bullish RSI. You can see we still have very clear divergence from the Thursday session, but you can't negate it here. It still looks bullish. We are above that trend line. Once again, on a closing basis, you can see we gapped higher, gapped down, gapped up, and rallied through that level. It does seem like we're kind of falling through that here after hours, so that's interesting to see. But overall, still holding in this area. Could absolutely see consolidation, kind of let these RSI and momentum factors cool off a little bit, let the EMAs catch up, and then we could see a leg higher from there. That would be interesting. But right now, we are definitely in an area of risk. Moving over to the NASDAQ just for a moment, you can see we did fall in the pre-market, which was interesting, but we held this trend line here. You can see this short-term uptrend line, marked a couple of bottoms here despite this overthrow, and then we had gotten to these tops. We were testing it multiple times here in the early hours of the session, and then once we closed at that level, opened higher, we pushed 3 candles above it. We're clearly above it now. Pulled back a little bit. We're right at VWAP and the 9 EMA here on the hourly chart. Again, does not look great into the after hours, but we're still well above all the EMAs and SMAs. Could just be a retest of this level. As long as that holds, we're still in good shape. Bullish momentum, bullish RSI. Next level to the upside is 408.41. This continues to look super strong. You can see that 408 level is the all-time high. Zooming out here just a little bit on the daily chart, you can see that 408 level is the all-time high for the NASDAQ. We are very close to that level. I would expect that we are going to test it at least on this run. We haven't quite gotten there yet, so I would expect a little bit more upside. Again, strong candle, 0.43% to the upside, and we closed fairly close to the highs. It is at least above the 50 line on the candle, which is decently strong. Moving over to the Russell. Russell did not do much of anything today. Moved a little bit lower, consolidated below that 21 EMA. Continues to look a little bit weak in my opinion. It did rally up and test 198.75 just for a moment right at the beginning. Could not hold that level and broke down immediately. Now you have a consolidation of EMAs here right at this highly traded zone. If it breaks below this 55 EMA, you can see just how much room there is to the downside. And I would expect a pretty decent move through those levels into this most recent high, which does correlate with that zone as well, right around that 189 area. So Russell looking a little bit weaker here today. Clearly a high, and you could argue this looks like a kind of deformed head and shoulders pattern as well. Left shoulder, head, right shoulder starting to roll over. And if it breaks through this neckline, if it breaks through this low here down at 196, there's going to be quite a bit of downside in my opinion. Moving over to the Dow, I added a level here at 373.74. We created that level here on 14 December, tested it again in the pre-market on 15 December, tested it once again here in the pre-market today, and then the mid-session here today. So that seems to be a defended zone right around that 373.75 level. Again, pulling back a little bit here today below the 9 and 21 EMAs. Got that 55 sitting at 372.23. And if that breaks, then you're looking for quite a bit of downside to these longer term support lines. Still have 369.50, but realistically, you'd be looking at the 200 SMA, in my opinion, sitting down around that 365 level. Moving over to SPY divided by the M2 money supply. I did not talk about it in the Sunday video, but I did want to highlight here. You can see that strong candle last week, up candle to start this week. We're well above that 2205 level, which is a very strong level, but we are getting close to overbought conditions here on this indicator one more time. We're currently sitting at 68.42. If this hits overbought conditions once again, that could be interesting. Clearly higher prices, clearly lower RSI. The question is, when does this start to pull back? Obviously, it's not doing it yet. Everything still looks bullish, but some divergence is forming. Moving over to Apple and Tesla. Apple fell throughout the session. Apple fell pretty hard on that first candle of the day. Pulled back, tested the 21 EMA, sold off a little bit after hours. Again, does not look great. Still an uptrend, still above that 55 EMA. Bearish momentum, bearish RSI. So interesting here. Definitely looks like in consolidation. Could be a left shoulder, head, right shoulder forming here on Apple. That could be interesting, but clear rejection from this most recent high. And then looking at Tesla, we talked about it hitting 255.44. Overthrew it pretty strongly up to 258. And then rejected very strongly, and then ended up bearish on the day, which is not great. Falling a little bit after hours, momentum says bearish, RSI breaking below the SMA just barely. Everything says Tesla's probably going to pull back a little bit, looking at that 21 EMA to come right up to our level right around this 246.46 level. Moving over to Broadcom and NVIDIA, these continue to drive the NASDAQ higher. They go higher just about every day, it seems like. And as long as these two stocks continue to do this, it's going to be difficult for the NASDAQ to pull back. So once again, another bullish day here, and on both of these, NVIDIA breaking out above that 500 level, which is a very strong level. You can see we are almost to all-time highs on NVIDIA. Let's go ahead and full screen that one. You can see we're almost to that all-time high. Let's go ahead and put a level there right at that closing basis, right around 505, 506, right around 505.80 to 506. The actual wick high is 509, so just a little bit of room to that upside. Does seem like we're going to get to that level. The question is, what happens then? Do we clearly break through, or do we reject from that level? Moving over to staples and discretionaries. Staples had a little bit of an update, a little bit more than 0.25%. Discretionaries 0.44%. We talked about it testing that 9. We talked about staples testing that 9 EMA on the daily chart. Held that level, did throw a wick down to 70.85, but held that level as well. Retested the 144, pulled back slightly. Could be an initial test if it pushes back through to that 72.50. That would be quite strong. And then looking at discretionaries, it did test our 180.10 level. Pulled back a little bit from there. Want to see it break through there if it's going to do it. Otherwise, this is a clear area of resistance. In terms of momentum there, still bullish momentum continues to tick higher. RSI massively overbought on the daily chart, up at 81.79. You don't see readings like that very often, but it continues to look quite strong. Moving over to utilities and industrials, I wanted to highlight the move that we've had here in utilities. You can see really strong candle on Wednesday of last week, rallied through multiple levels, broke 3 levels on one day. That's pretty unusual. Then we gapped up, tested the next one at 65.55, at 66.50, and then pulled back really strong right to the next one at 65, gapped through that level, broke the next one. And now you can see we are looking at 62.59 for the next support, which is that pivot high here from from November 3rd. We're below all the EMAs and SMAs besides that 55 here on the daily chart. Utilities showing quite a bit of strength. Utilities showing quite a bit of weakness after that overbought condition. And then similarly here on industrials, this has been one of the strongest sectors. Inside candle Friday, gap down, fell here today. If it pushes through this zone here for this gap fill tomorrow, that could be quite weak. Still very much an uptrend. Still could be just a short-term pullback, but it is worth paying attention to here in the short term. Moving over to breadth on the 50 and on the 20 and the 50 day. You can see we did get a step up here today on both of them. 20 testing that 86.53 level. Can chop in this zone for a while. Momentum still ticking towards bullish. RSI looks a little bit bullish as well. 50-day, slight step up, 1.84. You can see we're still holding well above that 83 level. Have not tested 92.25 yet, but we talked about this in the Friday video. You can see every time we get into this 92 area, we don't stay here very long, and there is significant pullbacks from this zone. So we're still waiting for that to culminate, but you can see a slight step down on momentum to open this week. We'll go down to the daily chart. You can see we've been chopping in the zone. We've been chopping towards this zone for a while. Haven't quite touched it yet. Momentum on the daily, momentum on RSI, both look weak. Just waiting for that to eventually culminate. Moving over to the 2-year and the 10-year, you can see we did get a slight tick higher on yields, which is interesting. Not very much, 0.04% here on the 2-year, 0.56% on the 10-year. Still well below 4% on the 10-year as well. I do think that's a pretty important level. Got very close to my 3.97 level. Still pulled back and dojied. Almost seems like we've neutralized at this level, at least in the short term. Moving over to the dollar just for a moment. Really did not go much of anywhere, 0.09% to the downside. You can see we're still holding above this 55 EMA. It does seem like this is going to be a rally through, back test of that 55, hold that level and then rally through. If that happens, we could see equities go a little bit lower over the next week or so. We also saw that divergence culminate here with a lower price and a higher RSI read. Still need to see some follow through on that, but overall a little bit bullish on the dollar. Moving over to bonds, J&K gap down, tested this trend line and held. Momentum still bullish, RSI still bullish. Looking at TLT, similar thesis, tested that 55, pulled back a little bit, Still bullish on everything in terms of indicators, but not a great start to markets. Go ahead and look at that on the daily chart. You can see weak candle on Friday, gap down here today, fell during the session. Similarly here on TLT, similarly here on JNK, culminated on Thursday, pulled back Friday, pulled back again here on Monday. Does not look great on bonds, which is part of why I was saying I think equities have it, which is part of why I was saying yields have at least stalled here, if not looking for a little bit of upside. Moving over to volatility, move index, tested this level on Friday, held that level. Then we got a massive gap higher and rally on the move index, showing a little bit of volatility coming through on bonds. Makes sense. We just saw how there's a little bit of weakness there. And then looking at the VIX, we'll go ahead and go full screen there. You can see we had been chopping higher here slowly. Might get above that 55 EMA, get above that 1275 level. Little bit of short-term bullishness. RSI crossed above the 50 line here on the 4-hour chart. Does look slightly bullish on the VIX. And then looking at the daily chart, you can see that gap up pretty much held above the 9 EMA. Need to see it get above that 21. Again, sitting in that 1275 level. In terms of, and then similarly here on RSI, got above the SMA, tested that level, looks a little bit stronger. Moving over to my accounts, I was actually down a little bit on the session. You can see most of those losses coming from these two covered calls. I ended up rolling out here really strongly again, out to 405 and 400 here now. Again, I think there's going to be a little bit of weakness, but it is difficult to time, that is for sure. The question is when. Right now I still have covered calls. I did add to my shares here now, so 400 shares, 4 covered calls, giving me lots of upside potential if markets continue to rally. But if they don't, I also have a lot of credit on these 4 covered calls, and then I continue to play short-term puts, and those worked out here today, collecting a little bit of credit to offset these losses on the call side. And then on the IWM, I did not do anything with that position. Continued to sit at 187. Again, still looks a little bit weak. Have lots of protection to the downside, waiting to collect on that credit that was mostly generated on the really strong up move against my calls. Overall, basically neutral, slightly bullish in terms of my positioning. Let me know down in the comments section what you think of the soft landing scenario. Will we get a soft landing or will we get a recession? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.